Wunderschönen guten Tag an die europäischen Teilnehmer und einen guten Morgen an alle amerikanisch-kanadischen Teilnehmer. A very good day to the European participants and good morning to the American-Canadian participants. Vielen Dank für Ihre Teilnahme an der heutigen Konferenz. Thank you for attending today's conference. Und wie Sie schon merken, die Konferenz wird heute zweisprachig durchgeführt. Wir haben viele Teilnehmer aus dem deutschsprachigen Europa, aber auch aus Kanada. As you already realized, today's conference will be bilingual. We have quite a lot of participants from the German-speaking part of Europe, as well as out of Canada and the US. Konkret heißt das, dass die eingeblendeten Präsentation teilweise auf Deutsch sein wird, der Vortrag selbst aber auf Englisch ist. In concrete terms, this means that some of the presentations are in German, but the lecture itself is in English. Wir beginnen zunächst mit einem Vortrag des Börsenjournalisten Tarik Dede zu den Märkten. We will start with a presentation by stock market journalist Tarik Dede on the markets. Herr Dede, would you please start your presentation?
Thank you very much. Willkommen an alle. Welcome everybody. My name is Tarik Dede, and I am a financial journalist and author for nearly 20 years now in Frankfurt, based in Germany. My presentation, my slides are in German, but I will speak in English because of the international audience. So my topic is what will happen in fall in the markets. We have a very turbulent year. 22 and 21 and 20 were not easy too. So let's see what will happen in the next months, let's say 6 to 12 months. Before we start to look in front, it's always good to look back, and this is the first half year. And you see on the top in yellow, that's the gold price. That's just a small minus of nearly 5%. And then we see shares, that's the MSCI World. Yeah. And then we see the bonds. Yeah. This is the US T-note future. And last not least, on the bottom, that's the Bitcoin. And what was always a good indicator for tech stocks. I think this has changed maybe in the last months. We will see what will happen in the next months. But as you see, gold was okay, not good, but okay. And what was really historic in the first 6 months, and this is, many say this is the first time ever that stocks and bonds lost in the first half year of a year. And that's really historic. Yeah. And I think this has a lot to do, and this is what all economists say and believe, that there was never a time when we had so low or cheap money, low interest rates, cheap money, and now everything is changing. And what we have seen last year was that it was beginning last year. We had supply chain problems before the Ukraine war. It's not always going back everything to the Ukraine war. This is very a political thing to find places or interruptions, geopolitical changes, and to say, okay, this has changed everything. Yes, it has changed a lot. Yeah. But if you look back, when I was a young student, I was playing with the new tech market around the year 2000. And as everybody knows, on 11th September, as this happened, this was one of the turning points, but it was not the reason why the market were turning. The market turned in March 2000, so 1.5 years before. And on the back, especially in the US, many economists and politicians said, oh, this was the reason why we had a recession in 21, 22. Was 9/11? No, it was not 9/11. We were already in a recession, and now if you're going back today to this year, we already had problems in the markets a lot, and in the industry, the world economy, before the start or the beginning of the Ukraine war at end of February. So don't believe politicians. They have their own agenda, and they are not investing money. They are looking for votes. Okay, so let's see. Okay, Bitcoin was truly the biggest loser in the market. And before that, when the market changed especially in the tech sector, this was in March 2021. From that on, you couldn't gain money with NASDAQ, for example, for nearly 1 year. And at that time, Bitcoin changed too. And yeah, another loser is the NASDAQ. Yeah, as we've seen, this is a 5-year back view, and you see these big move, and now we are here again. Some people or some investors and economists and analysts, they compare it with the time in 2008, but we will go back to that later. This is one of the winners. So cash was king in the first half year. As you see, the dollar, this is versus the euro. And we have this dollar basket international against other currencies too. And there the dollar has won too. So increased. Good for Europeans. Yeah, because we export a lot to the US. Bad for many economies in the emerging markets because they have dollar debts. We had a lot of crisis before about that. Think of Russia 1898 or Asia crisis 97. So we will see what will happen. But what we can see is now there's a lot of there are a lot of tensions in the market, in the credit market for bonds of countries. And we will see which countries will really have problems. And we have 2 winners in the inflation rate. That's Argentina and Turkey today. And they have inflation rates about 80%. In Turkey, the economists say 80% is not the truth. It's about 130%. And these countries, for example, Turkey has debt in US dollar. And we will see what will happen. Yeah, it's not easy because Turkey, has maybe a strategic position in this Ukraine conflict. So we will see. But the truth is the dollar is the winner of the year. And then we will have another winner. That's especially in Europe. That's the European gas future. And as you see, we already had higher gas prices at the end of the last year. And then this is the spike December. And then we had end of February, 29th, I think, was the beginning of the war. Yeah. And we had this spike here. And now Germany is buying as crazy, some said today, in the market because we are filling the depots. And we will reach 85%, is what I read today, maybe in September. And this is in plan to be prepared for the winter. I can't tell you if this will be enough, because if you see the analysts from the gas market, they say if there's a hard winter, we will have problems in Europe, especially in Germany. And we will have to wear no t-shirts anymore at home in the winter, but pullover and all this stuff. So we will see what will happen. But in my feeling is that that could be the top. Yeah. Because there is coming more and more gas from other countries. As you maybe have read, Norway and the Dutch, they're exporting more gas to Germany. There's an offer from China for LNG. So we will see what will happen. And in Germany, we are building now 3 terminals, especially in the north, at the North Sea, to get the LNG, the liquid gas. So this will solve some problems, but the always question here in Germany, not only in the political space, but also in the market is, will it be enough for the winter? Especially when you see we have 83 million people here. That's a lot. In a hard winter, it can really be cold, but we haven't seen a hard winter for 12 years, I think. Yeah. So that could be a problem. And we have the biggest chemical industry in the world. So BASF is the biggest chemical company in the world. It's just 1 hour south of Frankfurt. It's a big fabrications place, and there are a lot of jobs in this industry. So we will see what will happen. The other thing is maybe just to finish that, the last day, the prices for other energies are going up too in Germany. So we will see if this what will do this to the markets, because we are winning. For example, we are still winning energy out of gas. So this is really a problem. And the government said today that they will help the people, especially the households, but also the industry. If there will be big problems, we will see. I think this is very important, especially for the German market. And as you see in the share prices, if you see BASF, the biggest chemical company, or Covestro from Leverkusen, the old Bayer daughter, their share prices are very volatile. And always when we have these spikes in the markets, they're falling. And when the gas price is going down, the share price are going up. So this is very interesting to see. And this is very important, especially if you see the share of the industry in Germany. We are not a service country like France or maybe more the US, where the consumer is more important. We are really relying on the industry. But as I told you, we have the dollar, so that means our exports are very cheap now, and we gain a lot of strength in the competition area against other countries. Okay. So as I told you, slides are in German. So what has changed? The big overview is we have inflation. Today the numbers from Europe came in with 9.1%. That's a lot. The Dutch and the UK, not a Euro member, not a EU member anymore, but they have more than 10%. The US were at 8.5 in July. And as I always say, look at there's an economist from the US. He's doing the shadow inflation rates. So the true inflation rate could be much more higher, especially in the US, but also in Europe. So this is really a problem. And the Fed started with hiking up the interest rates. The time of no price for money is over. So money has a price again. The interest rate is the price of the money, nothing else. Just simple. And so they are fighting the inflation. And as Powell, the Fed chair, said in Jackson Hole last week, and this was what turns the markets down. Let's see, we'll fight inflation. That's point one, because our industry or the US economy is still in a good shape. So we will see, I think, on 21st of September, that's the next Fed day. So we will see 0.75, I think, higher interest rates. And another Fed speaker said yesterday evening, that the goal could be 3.5%. That's okay. But if you see inflation at 8.5, let's assume it will go down a little bit. That's still a negative real rate interest rate. And the other point is alles wird knapper. This is a German. We always have these short things in Germany. We say alles wird knapper. That means there's really a problem today to get not only price. Money has its price, but also if you order cars, if you want to buy something. I remember last week when we were in the summer vacations, we had a lot of problem in Germany and other countries to buy solar cream to protect you from the sun. There was nothing in the markets. And as you know, Germany is not the biggest tourist destination in summer. So it's just the demand from inside the country mostly. And we have all over the economy these little problems, and not only in Germany, but also in Europe, and I think in North America too. You all saw that, I think, in summer, and still from Eastern to today, problems at the airports. Where are all the workers gone? This was a big title of cover story of a big German magazine, Der Spiegel, some weeks ago. Nobody knows where all the workers are. They the workers who were kicked out in the pandemic, they're not coming back in gastronomy, in restaurants, in hotels, at the airports, and nobody knows where all the people's gone and what are they living on. But you can't see it in the numbers, so you can't see it in the employee statistics of the countries. Okay, just going back. Okay, the situation was going turbulent before the war with Ukraine. Ukraine is like a catalyst and changing everything. We will come back to that later. And maybe just one example more. Diesel, so gasoline in Germany is very expensive, in other countries in Germany and Europe too. So we pay more than 2.05 per liter diesel. And the diesel prices were already going up last year. And this is something to do with the refineries. When in the pandemic, when we had lockdowns in Europe, the companies closed refineries, or lowered production, and now they have problems to come back to get the old to use at full capacity to go back there. And that's why diesel was already expensive, for example, last year, and now it's really, really expensive. €2 a lot. Okay, what does it mean if you have higher interest rates? As you all know, in the last 14 years since the financial crisis in 2008, Fed, European Central Bank, ECB, and the Bank of Japan and other central banks too, they have they gave money into the markets, a lot of money, as you see from, for example, here. I think that's the blue one. That's the European Central Bank. Yeah, this is this is the last years from financial crisis, and this is the last 2 years pandemic level. Yeah, you see it from March 2020 when we had the low in the markets going a lot. The central banks helped the markets and the economy to come back. And now we are changing from quantitative easing, QE, to tightening, quantitative tightening. And as you see at the end here, it's not growing anymore. So there's less money in the market, and you see that in the stock market, in the bond market, everywhere in the markets.
Herr Dede, ein kurzer Hinweis von mir, es sind noch 2 Minuten.
Okay.
Just 2 minutes left.
Just one thing, what I think people have not in mind really, or in focus, the global real disposable income of the households is really going down. So this is really a problem. This has to do with prices, with inflation, and this is lower. We are on a lower level than in the 70s with high inflation, and in the mid-80s with the problems a lot, especially in the US. So what will happen? Technically, we had a recession the first half year in the US. I think Europe is surely going into a recession. Yeah, every number you see in the markets, yes, this will be a recession. But we have the problem with inflation, and the Fed told us, okay, the goal is maybe 3.5%. I think we will have interest rates going up till spring 23. And then we will have an effect because we have a high base effect from 22. In February and March, we had the highest inflation spikes in more on a monthly basis. So in February 23, March 23, we will see that there are changes and the inflation is maybe going a little back. Some say to 5%. We don't know today. We will see. But don't forget, higher interest rates always means real estate markets have problems. We already see in Frankfurt and other German and European cities that there are low investments now, or projects are on hold. Yeah. Okay. And maybe, yeah. So just one more minute. In my opinion, and I think I'm not the only one who think that, is we have really a good chance to see the low in the fall. Yeah. We will see a bad Q3 with a bad earnings season. I'm sure about that, especially in Europe. US, I can't tell you. It's really different from company to company. But this could be a chance to buy cheap stocks and to invest into the market. And maybe just now to look back to 2.8. The yellow one is the S&P 500 at the biggest, and I think index in the most important index in the world in 2.8. And this is in white. We see the S&P 500. Yeah, today in the last year. As you see, if this is true, yeah, we will have 15% maybe. But the experience, or my experience, and as Mark Twain always said, history is not repeating. Yeah, it rhymes. So we'll see if it rhymes or if it repeats. But I think there's a good chance to see maybe the low in fall. Yeah. And one thing more, we always have winners in this market. So this is a NASDAQ last year, the last 12 months. You see Dollar Tree, cheap things to buy there, and the share price going up. Biotech company, tech company, hotels, wholesale. And we see there are always stocks who are moving up in bad markets. Yeah, important is liquidity. That's what I do. I have 50% liquidity in my portfolio. So yeah. And one thing, especially for the tech markets, is we are still depending on the NASDAQ or S&P, and you see what Apple, Alphabet, Amazon, Microsoft, these 4 big companies do. This is important for the market. And the move we have seen in the summer rally in the last 8 weeks till mid-August was mostly driven by these companies and these shares. So it's always good everybody's invested here. So don't look at these shares, look at other shares, look at small and mid caps. They perform much better, and maybe you will have a good chance to buy cheap. And that's the most important thing, as Warren Buffett always said. Okay, I think we don't have time for questions. So thank you very much for your patience. And if you have questions, you can mail me. And yeah, that's from my side. Thanks a lot.